we don't miss anything when we do the diligence because we are so focused on making sure we're looking at the risks and trying to predict and making sure that we're fulfilling our fiduciary responsibilities to our LPs.
6 out of the 9 portfolio companies that we have in our Fund 1 portfolio, the founders actually reached out to us.
What Al is talking about is if I know that this deal doesn't 100% fit our criteria, then I have to defend it.
It's always going to be a level of intuition when making these decisions. And so we don't always necessarily know the step-by-step process in our minds because we're just so ingrained.
It's very, very important that we understand them, they understand us, so that we can provide the value which we can.
That's a beautiful thing about us. We're different.
Good morning, everybody. Thank you so much for this session. Looking forward. Today we have Quartus Capital Partners team. We have Taral, which he is a managing partner and founder of Quartus Capital Partners.
Pleasure to be here.
Thank you. We have Rizwan, and Rizwan is a partner and also most likely and impressive AI background, so we're going to tap into that. And then we have Barry Day, thank you, a principal also at the company. And today we're going to dive deep into how and the whereabouts or what this Quartus Capital Partners do and the way have an interesting conversations. We are going to have the what's due diligence and deal sourcing, the process that we're happening, and how do we manage it at Quartus Capital Partners. So without further ado, do you want to set the stage?
So deal sourcing is very close to many LPs. They care less about due diligence per se, relatively speaking. They care a lot about deal sourcing.
Okay.
And the reason is very obvious, perhaps, or it may not be obvious to some, but it's obvious to us. They want to know, why did we get them?
Right.
And how did we get them? And so forth. And they're trying to find a secret sauce we might have behind those deal sourcing. So that's a question, Rizwan. Would you agree?
Yeah.
And Rizwan has provided a very consistent response to those prospective investors as to why deals come to us, why we meet those founders, how we met them. So people want to know.
Okay.
Why, how come, where. They ask. So deal sourcing is, relatively speaking, a lot more critical. I know it's a long-winded way to set the stage. So maybe we can ask Rizwan to talk a little bit about deal sourcing first.
Perfect.
Yeah.
Perfect.
Thank you, Al. Yeah, absolutely. This is a very common question, which is asked. And, the consistent answer which Al is talking about, it basically came over time, because that's the reality, that's the fact, which is that we have been in existence for more than 10 years as a firm. Mm-hmm. And over the years, we have established relationships with investment bankers, advisors, and other companies which are, which actually are, also doing the deal sourcing. And they share with us. So that is one major way how the deals are coming to us. The second one is that we have been in industry for 30, 35 years. All of us, we are all experienced people. And so the relationships which we have built during those times, they are now paying off because some of those people, obviously, they are starting their own companies. Some of them are at very prominent positions. And so they know we are doing this, so they are actually favoring us by sending those deals. But the most importantly, and we have seen this over the period of time, once we started investing, once we had few companies who became our portfolio companies, similar type of companies are seeking us out. For example, in healthcare especially, because we invested in 4 companies in healthcare. And those people who are seeking us out, normally they are not part of the crowd. They haven't been out there who many people have rejected, if you want to think from that point of view. We get the first digs on them. Okay. We get the first opportunity. Good. And those are the best ones. So far, that's what we have found. So combine together all that. And of course, we attend conferences. Barry just came from a conference where he met with a bunch of those potential deals. So that's a major source as well. But the best ones are those which directly come to us.
Yeah, and just to add what Rizwan just said, and 6 out of the 9 portfolio companies that we have in our Fund 1 portfolio, the founders actually reached out to us. So some of the investors and prospective investors ask us, how come? So, we said, because they go to online searches and more recently going to ChatGPT and the likes and ask, what are the major GPs that are investing in healthcare and AI? What are the major GPs that are investing in edtech and AI, et cetera, et cetera? And most likely they find our name in that list.
Right.
Or on those lists. So founders are using all possible information resources.
So going back to the power of network, or the power of your network and the space you've been navigating for the past decades. The second thing is the reputation or the way they're finding you in terms of online or in terms of word of mouth.
Right.
That's actually
One prospective investor asked us very precisely, how do they find us? How do they know we exist? Right? So I think we discussed this yesterday with an investor. So basically, they're using all the information resources they have, particularly AI search tools now, to basically cross reference firms that do this and this. That's how they find us.
Right.
Yeah. And some companies actually have told us on numerous occasions that they like us because we have a very tight investment thesis. And so our expertise, they know, are the people that they want to partner with because we understand their business.
Yeah.
Right.
Going to that route, the investment thesis, in a nutshell, I know we've covered in other communications, but so that we set the stage, investment thesis, can you?
Well, I mean, we obviously, AI is the core thesis for us. We invest in AI-based companies, or AI-enabled companies, I should say. Along with that, our philosophy is to invest in growth stage companies, which actually automatically creates a filter for us, which is that they should have a certain level of maturity as a company. They should have certain level of revenue already. With the Fund 1, we started with 1 million. And they should show demonstrable growth. That is very important. We also look at the management team because we are going to invest in few companies. Maybe in the first fund, for example, we have only 9 companies, which means we work with the management team very closely. It's very, very important that we understand them, they understand us, so that we can provide the value which we can. So those things become automatically our filter, basically. And so that's the primary. And then AI, which areas are being impacted positively with AI. Healthcare comes up one of the top ones. EdTech is another one. Security, cybersecurity is another one. So automatically those become the areas where we invest in.
We have this deal sourcing. Now the deal's in. What happens in that due diligence process that makes Quartus Capital?
So all the deals go to Barry at the end of the day.
Okay.
Yes.
Okay.
So he's our chief gatekeeper for deals.
Okay.
If any startup companies see this and I say, please send it to deals.com, that's just sending it to my other email address so I can put it in CRM.
Okay.
Even he sends the deals to himself.
Yes.
Okay. Okay. So
Right.
can you walk me through the?
Well, that's Barry's area. So.
Well, go ahead.
Sure. So when we do our diligence, we actually, I want to say that we don't have one due diligence process. We really have 3 main due diligence processes. The first one is when we meet people and we're evaluating just their technology, just the market as it is now. And we're also taking a quick look at whether or not what their traction is. And then we have our check boxes, like, what stage are they in? How much are they raising? And those. And if they're in our wheelhouse and we like the technology and the market looks like it's going to go somewhere, or at least at present is worth looking at, then we take a call with them. we will meet with them because I'm very protective of the partners' times. These guys I've never seen anybody so hardworking as Al and Rizwan. It's just amazing. So I want to make sure that I don't waste their time with bad deals or bad companies. So when we go through that, once we meet with them, then we get a better feel for who they are. Then we can do a little deeper dive into them. We look at the team. We look at how much revenue they're looking to make with the funding versus what they've been on track for before. And then we look at how the market might change in the future. And because we're not looking at it from the perspective of Wall Street people where they're following trends, because these people are actually steering the direction and changing the market. That's what the new technology is doing. So we're trying to predict whether or not they can accurately change this. Who are their competitors? How many people are doing similar things? And most importantly, we want to know, do they have defensible IP? Because as they grow, especially by the time they get to the Series B, C stage, other people are going to start looking at them. And if big companies look at what they have and say, you know what, we can put 12 engineers on here and we can catch up to them in 6 months, that's going to be a big problem. But if they have the IP protection, they have a technology that's not based on the AI, but just the AI is giving them the competitive advantage, that's something we want to look at. So that's when we start looking at the potential of a term sheet, and then we go into the deep dive with due diligence, where we go over everything with a fine-tooth comb. And that is, we find stuff that nobody else finds.
Right.
So I think before even we get to that point that Barry was covering, that's a initial level of screening that we do.
Yeah.
So once Rizwan and I and Barry, we collect the deals that are interesting or significantly interesting to any one of us, we discuss them every Friday. So maybe Rizwan, you can tell Gabriella how we do that.
Right. So every Friday we meet, and that's the opportunity for Barry to bring in any of the deals which he had reviewed over the week.
Okay.
And just like Al was saying, all of us, before sending it to the deals.com, we filter out 70% of the deals anyways.
Okay.
Right? Like Al is saying, it's the same thing with me as well, because our philosophy and the filter is always in our head and mind, which is that we are not going to invest in a company which is at early stage. They must have certain level of revenue, right? They should be SaaS company. They should be in the software. So it's very easy to filter out those companies. And do they have a moat which is defendable, right? Very easy to see just from the email. You can see what area.
Give me
they
an
are
example
in.
of a mode that's not defendable.
So once it's entered over there, anything which goes into that email box, Barry reviews it. It is actually then Barry's responsibility to put it into our pipeline, goes into our CRM system. We have heavily invested in our IT infrastructure from that point of view as well, where we can manage any information coming from our deals companies or other places into the CRM system. Mm-hmm. So once it's there, it's forever being managed over there during the process of due diligence. We have actually, it's very hard to kind of verbally describe our total process, but it's a very elaborate process, which has essentially a scorecarding system which we apply, which actually helps us see the companies comparatively with each other and against the portfolio companies which we have already selected to be invested in. So that helps us. Then there is a 3-4 step process of due diligence which we go through. And during that process, memo is written. Right. This is what Barry's responsibility is. He's the one who actually writes that memo. I help him. I'm his assistant from that perspective. And once the memo is there, and this is above and beyond that Friday, right? I mean, once we go to Friday, that's where the decision is made whether we are going to pursue that company or not.
This is after the term sheet
is signed. It's after the term sheet is signed, so we go through that whole process. So it's a pretty long, elaborate process from that perspective. It takes us about a quarter minimum. If we decide that we are going to look at this company very seriously.
But there's a lot of human factor here. So we don't come across a mechanical or, or engineered process. It's a very human-centered process. We also get passionate debates and discussion. Have you seen Rizwan being passionate about a deal? No, probably you haven't. So,
No.
so we all get fascinated.
I've seen it on the AI explanation.
So it's the same thing. So on some deal calls, if Rizwan identified a deal that he feels passionate about, that's a beautiful thing about us. We're different. I made this remark 3-4 times yesterday. I said, although we have known each other for 35 years, we couldn't be more different from each other the way we think, which is the beautiful thing about and Barry and I and Rizwan and I and Rizwan and Barry, because we come from different places, we have different backgrounds. So any one of us, if we met somebody or met a deal that we felt very excited about, we don't have a lot of facts yet, but we think this company is doing this very interesting thing. We will have this very passionate discussion about it.
Right.
So sometimes they don't go through this mechanical process. They are passionate interest first, then fact-finding later. Right?
Process is just a vehicle.
Well,
Right.
I see it as judgment overriding the process, and in terms of maybe it's not.
Well, it's still process, but what Al is talking about is if I know that this deal doesn't 100% fit our criteria, then I have to defend it. I mean, it's actually a pretty normal process in any VC firm. You get a champion, and that champion actually basically is
why we make exception.
Right. Is very passionate about that particular deal. And then he has to defend it. And only way to defend it is that you have to be passionate about it. Otherwise, what's the point? Right. So
and there is a level of intuition. It's always going to be a level of intuition when making these decisions. But when I want to be very clear here, when we say intuition, we're not talking about psychic abilities or just following our feelings. We're talking about experience that is so, knowledge that we are so intimately involved with that we've internalized it. And so we don't always necessarily know the step-by-step process in our minds because we're just so ingrained.
That's a good way to put it, Barry. It's an experience-based intuition. And we feel that this company could significantly add an angle or added benefit to our portfolio that we don't have today. Or we could think of this company could perhaps add significant value add to an existing portfolio company. Or this company could be our first foothold in fintech, as an example. So I think that these are all experience-based intuition, but we have those, and those discussions make our Friday deal call very interesting. And tell Gabriela about how you have begun to invite some of the advisors to those calls and what they do for us.
So there's a gentleman who just retired from Intel, and he became our advisor. So we have started inviting him into our deals call every week.
Okay.
So this is somebody with the 35-year experience in one of the top, chip companies, chip design company, chip manufacturing company, to advise us on anything and everything under the sun where chips are needed. And AI is perhaps because his expertise, because he was part of Intel, he knows what's happening with AMD, he knows what's happening with NVIDIA. And he, interestingly, at Intel was involved in the AI initiatives which were there in Intel. So although we are not going to be investing in a chip company.
No, but that's a profile you add to the table of saying, okay, let's pick his brain or pick the advisor's brain in terms of.
But he can tell us what's happening in the industry, how the changes which are going on at the infrastructure level are going to impact.
Right.
So very valuable input which he provides.
Why don't we go into real examples? I know we need to sanitize them a bit, but tell me about real examples as to what it is and how illustrate the due diligence process that it went well.
Okay. So we do have one company in our portfolio. It was probably the best company as far as doing the diligence that I've ever had the joy of doing the diligence, because they had the most robust data room that I have ever seen in my life. They had every question we had or that they could answer in the data room. Most of the times when we were reaching out to him to say, hey, where is this in the data room? Because it was so much information in there. And I don't think, did we have a single question that we had to go outside of their data room in that case? I don't think we did.
No, that's actually a beautiful data room. Yeah.
And they're actually one of our flagship companies.
So some companies are much better prepared than others. So perhaps ask your question again. I want to make sure the intention of your question. What was?
So I wanted to understand the examples, real case examples as to this deal flow, due diligence process in the making, and it's already part of your portfolio. And the other end is what's the next follow-up question is one that went through the deal flow, went through the due diligence, went through the process, and we said yes, and it was evidently a no. And then the one that we have said no, and we went through the process. So that's my thought process at this point.
So I think to answer this question, because if we start talking about our portfolio companies, it will be picking favorite,
among
child.
the children.
Yeah, favorite child. Because fortunately, most of our companies are doing well, and they're doing something very important. Mm-hmm. I'll tell you a little bit of a joy that I felt yesterday when Rizwan and I were talking to one prospective investor at iConnections. So we were just walking them through our portfolio companies. Mm-hmm. It just so happened I mentioned one of the portfolio companies. I said, I know them. I think it's very rare prospective investors know our portfolio companies because most of our portfolio companies are flying under the radar. That's what we call them. They are not very well known. They're not blingy, right? Right. They're not hot, but they are doing important stuff, and they're actually very successful, right? In their own right. But this guy said, oh, not only I know them, my son is a client of theirs. His son uses their technology for healthcare.
Wow.
And so you know what I'm talking about, right? So that was a huge joy. And then I think, Rizwan, you met somebody recently, and they said that they used to be advisor to yet another of our California company.
Yes, sir.
Yeah. So we are beginning to hear that now in our fifth year, sixth year, right?
Yeah.
Right?
Yeah.
So that is a powerful. We're going to hear more of those over time. Mm-hmm. We intentionally or unintentionally, I think it's mostly unintentionally, we have not been pursuing hot, blingy companies.
Right.
But companies are doing meaningful stuff, but their names are now beginning to resonate and pop, and more people are recognizing them, right? Would you agree, Rizwan?
Yeah, no, that plus, especially in Bay Area, if the company is from Bay Area, there is a very high probability that many people in Bay Area, if you talk to another startup, they will know them. Right? So because people know each other over there, small world.
Barry, maybe one example of a space that you were so deep in due diligence that you found out, you were mentioning that case.
Oh, yes.
Elaborate a bit.
Yeah, so we go really deep. And one of the things I've found is that most of the CEOs, after we've made our investment, have said the same thing. We've never encountered anyone who's gone through the diligence as deeply as you have, including someone who was a 9-time entrepreneur, said he'd never seen an investor going that deep. And one example was one of our portfolio companies, while we were looking at it, it was just an oversight. He wasn't hiding anything, but there was a lawsuit against his company. Mm-hmm. And of course, I pulled it up. I came across it. I pulled it up. I read it. It was a frivolous lawsuit. But I spoke with the CEO about what was going on, and he said, oh yeah, this guy, he just didn't understand the industry and the business, and he thought we owed him money, but we could see the court case was there. But he was surprised that I found that, and he had almost forgotten about it. So we don't miss anything when we do the diligence because we are so focused on making sure we're looking at the risks and trying to predict and making sure that, we're fulfilling our fiduciary responsibilities to our LPs.
Okay, going to the final segment of this, what is the one thing that Quartus will not compromise on?
I think it's a very hard to say in the absolute terms, perhaps other than ethics and morality. So we have our own core values that are based on our global, multi-national experience, right? And we ourselves don't invest in companies that are in immoral industries. We are not judging anybody else. We just don't invest in them. Gaming, gambling, things of that sort. We also are driven by our fiduciary code of conduct. So we want to do what is right for investors. And we ourselves, believe in doing the right thing in every situation that we see ourselves in. So that drives us in avoiding certain things. So it just so happened that because we have that frame all the time, so we don't even talk to those companies or groups of companies. So very rarely somebody asks us that. Some impact-oriented investors will ask us, and we have to say yes. We don't do this. We don't do this. We don't do this. So it's basically ethics and and ethical use of technology. So in AI, this has become, and this is going to become a huge area of discussion, is the ethical, moral use of technology to protect the patients, consumers, societies, companies, and so forth. Rizwan and I were having this discussion in the car this morning. A certain AI, a company was debating about that Chinese AI companies are stealing, distilling, they call it, distillation. That was a term that is new to my vocabulary in the context of AI. There was a story in Financial Times this morning. So they are saying Chinese companies are distilling their models to make their models. And suddenly this company CEO is saying, should this be illegal? Is this illegal? And then other AI company CEO is saying, by the way, you also stole my models, right? So why?
Where does the buck stop?
So on one hand, these big AI companies are working under little or no oversight and compliance. There's hardly any federal or other legal or other framework for privacy, for ethical use of information, and so forth, right? On the other side, the same CEO, this morning, one of them, was making this as an issue because somebody took his.
Now he's on the receiving end.
And then he was using the goal. He was basically saying, if it gets into the wrong hand, they can make a bomb, with the our AI model. So it was okay for them to provide to consumer the same model and data, but it's not okay for a Chinese model company to provide the same data. The point is, this is a huge ethical, legal, and other layers of issues. Now, we are not above this. So we avoid, to the extent we can, these kind of issues. Yeah. So because we invest in health care, in addition to edtech and other areas, so we always ask, we always carefully review how well patient, or in this case, consumer data is protected. Right?
I ran into a startup company just this week who signed illegal contracts with Google and Meta if they were using their LLMs, that they are not allowed to collect their data.
Right.
Okay, in terms of confidentiality, I know you're talking about cybersecurity, you're talking about what's happening, but in terms of how do we handle within Quartus Capital the confidentiality and why would an LP say principle that you're goes through the process in terms of how do you handle that?
Confidentiality of what?
Of information, data. I mean, what's your premise for
the potential portfolio companies, you mean?
Mm-hmm.
I mean, there is a normal, obviously, process we go through, which is pre-NDA, post-NDA information they share, and post-NDA information after NDA is signed is protected just like any other organization and company actually protects that. As far as our data, where it sits, we are enterprise customer for Google. And so the level of protection which they provide is available to us in terms of losing that information or data anywhere else. We are very careful in terms of sharing that information outside with anybody else. Okay. If we are sharing with an advisor is part of our team, legally signed. Only then we share. So we are very. I mean, we come from working in large companies, right? All of us. Yeah. So we know how we were acting and behaving ethically over there. We are continuing that pretty much here.
And even without an NDA, we always operate under the standards of professional conduct.
Right.
Okay. Yeah. One principle LP should associate with Quartus Capital: deal sourcing and due diligence.
I'm sorry, say it again.
What's the one principle that LPs would associate Quartus Capital Partners with your due diligence and deal sourcing approach? One principle.
With the diligence, I would definitely talk about the how far we go over with the fine-tooth comb.
Okay.
Yeah, so I think if you're talking about principle, the principle will be ethical use of technology. Mm-hmm. That's a very important principle. Privacy of consumer and the patients and other consumers of the technology, right? Mm-hmm. That's a principle. We talk about governance and compliance of those companies. Barry and we were discussing before we started this. So there are multiple principles, but if it's one, and I think that's perhaps on the top of our list, and that's ethical use of technology, right?
Yeah,
and protection of data.
And I would also say our focus on the type of AI technology, not just through ethically, but also from a business case, like future proofing. And as we always say, there's so much AI slop that we're looking at the stuff that will survive the AI bubble because of the way it's being used. Right. I don't know exactly how to describe that, but
well, I mean that's a constant theme. Obviously, that's a challenge as well as that's the excitement of the AI. Yeah. That things are moving, changing so fast that you have to be careful in terms of where the moat is, where the gravity is moving, right, from the AI perspective.